So good evening, everyone. My name is Kimberly Watson, and I am the first Vice President of Programs. And on behalf of the National Coalition of 100 Black Women Los Angeles, I want to welcome all of you today. So our mission is to advocate on behalf of Black women and girls to promote leadership, development, and gender equity in areas of health, education, economic empowerment, and public policy. And before we get started, I would like to introduce all of you to our president, Dr. Carmen Downs.
Thank you, VP Watson. Good evening, everyone. And first and foremost, Happy New Year. The fact that we have almost 50 individuals or well over 50 individuals that have registered for this series lets me know that finances, your finances, is an important part of your financial goal for 2023. So thank you for giving the National Coalition of 100 Black Women Los Angeles chapter an opportunity to contribute to your financial goals for the year. And secondly, as well as most importantly, I would like to thank our community partner, Citibank. We have been working with them for a short amount of time, but share the same goal. And that is an exciting goal to really help impart knowledge and information and resources and tools to our community for the financial literacy and building the financial knowledge of our community. So thank you so much to Rashi as well as Jermaine, who's going to facilitate tonight's session. Again, I want to sincerely thank you all for joining us and really ask you to commit yourselves to the entire 6 weeks because we have some outstanding information for you. We're going to continue this throughout the year, so stay tuned for more information. But thank you so much again for joining us. VP Watson, I'll turn it back to you.
All righty. Well, financial literacy is a component of our Sisternomics program. And throughout the year, we host a number of workshops that focus on smart money management, home ownership, and wealth building. And I want to thank all of you for attending the first session of our 6-week series. And each session will be held via Zoom. You'll be able to log in with the link that you received today. And the sessions are individual so that if you have friends or you know people who might benefit from this information, we encourage you to invite them. All of the information and the knowledge that you get tonight will build on top of one thing on top of the other, but we are hoping that this is information that you will be able to implement immediately into your lives. So tonight we have partnered with Citibank to bring you an engaging, relevant, and practical information to assist you on your journey to financial fitness. And I'd like to introduce our speaker, Jermaine James, who is the VP of Retail Services Division for Citibank, and also Rashi Kalur, who is the part of the community relations team. And it's our partnership with Citibank and their community relations team that brings workshops like these to our community. So we want to thank you and we appreciate you. And so Jermaine, if you could introduce yourself to everyone.
All right, thank you very much. Well, first and foremost, good evening to everyone. Happy New Year to you. My name is Jermaine James. I'm part of the Citibank Retail Services Division here in the Los Angeles area. Been with Citi now for about going on over a year. And I've had the opportunity to work with the Community Relations Department to facilitate multiple workshops just like this one. And I'm looking forward, to being your host for the next 6 weeks. So I think we've got them scheduled from now through February, the month of February. And I certainly hope that the information that we are going to provide, this will definitely give you some clear insight on, and information and knowledge on helping you achieve your financial goals for the year 2023. So thank you very much for having us, and we look forward to being part of these sessions.
Thank you. And if we could have everyone, we'd love to hear from all of you, but I think our numbers are growing and growing, but we would like for you to just place in the chat how you heard about this event And maybe is there one thing that you would like to make sure you take away from this event? So if you could just type in the chat really quick how you heard about it. And also one thing you'd like to make sure you take away from our series.
Hi, Kimberly. I just wanted to let you know, Rashi here, we don't have chat function on City's computer. So when you get those chat things, you can just convey that to Jermaine so he can answer them.
Okay, will
Thank
do.
you. Thanks.
Will do. All right. And Jermaine, if we can start whenever you're ready.
All right, thank you very much. So I'm just going to go ahead and share my screen shortly. So we should actually have the presentation in clear view. Just give me 1 second as I switch over to presenter mode. And we should be getting ready to start. So once again, welcome to everyone that's been able to get on the call this evening. Just want to kind of go through, just kind of give you some insight. So there's a few, as we look at this presentation, your income and your expenses, based on the training session that we have today, there's a number of topics that we're going to cover. And through each and every topic that we're going to cover, there's going to be some key takeaways for you, that you can actually look at and possibly, revise and, take notes in terms of helping you achieve your goals. So to kick things off, for those of you that are online, that are on the call, a participant guide should have actually been sent out to you. If you don't have a copy of this, I'm sure the ladies can provide that to you. But there will be some references throughout the presentation that will just kind of give you pages that you can go ahead and look at within the participant guide. For the sake of time today, we're just going to kind of go through the actual content, but I'd be more than happy to answer any questions that may come up. So as we kind of get ready into it, we're going to go into section 1, which is income. And as mentioned, you can look at this on page 3 of your participant guide. So with that being said, key takeaway, right? What do we want to achieve as we go over this topic? First and foremost, understanding your income. This is the first step to using it, to meet your needs, right? So this is going to be a key takeaway for this particular session. So we're going to talk about what is income, right? So essentially income is money, you receive. And then also we'll kind of look at, the big question is, so what are some of the types of income, that could be available to you? So with that being said, let's go through a list of the different types of income, right? And when we think about it overall, first and foremost, we'll touch on kind of earned income. So this is, what you earn by working, whether, it's wages from a jobs, tips, contractual work, or what you make through self-employment, right? For those folks that may have income from assets and investments, assets are the things you own. An example of, income from assets is, interest that a, financial institution pays you on the money that you keep in your account, or maybe someone pays you, for borrowing a service for services that you could potentially provide, right? Some people may earn income from stocks and, other business investments as well as real estate. So that's kind of what, encompasses, the income from assets and investments. Then there's also public benefits, right? Now, this will definitely vary, by state, but essentially public benefits or entitlements that pay you money are also going to be other forms of income that you could, possibly earn. Other benefits or other entitlements, that's also based on, the different streams or, access income that you may have. And of course, essentially, when we kind of round it up, besides earned income, income from assets and public benefits, folks may, have, jobs or services that they provide, which will definitely bring in income for them. So it's just really important to be able to kind of understand, okay, so where is my money coming from? Where am I able to earn income from? And these that are on your screen, that are on screen right now, are the most common types. And of course, there's definitely other avenues that people could earn income from, as well as, entitlements that may be available to them. So with that being said, it brings us over to our next session. And we're going to kind of break this down and kind of look at gross and net income. Really, really critical, right? Because when we think about gross income, this is the total income without any deduction. So for most of us, that, go to work, even if you own your own business, when you think about what your monthly income looks like before any deductions, this will essentially kind of factor into as what is gross income. But then when we talk about net income, right? So net income, let's break this down. So gross income minus the deductions, right? And what this basically comes down to, when you think about your gross income, you've taken out your deductions. What you have to save, share, and spend, and essentially becomes what you would consider to be your take-home pay, right? So in most instances, you may have, there may be questions that may come up, depending on, whether financial services or things that you may be applying for, loans and anything else related to it. And the first thing they'll kind of, generally ask you is list your gross income. And when you're listing your gross income, it's really important to remember that this is what your actual income looks like before any potential deductions. So gross income minus deductions is what your net income, essentially amounts to. Right. So then with that being said, we've talked about the different types of income, the different types of income you can earn. We've looked at gross income versus net income. Now we're also going to touch on on garnishment, because there's different types of garnishments out there. And essentially it comes down to three, aspects of garnishment: wage garnishment, account garnishment, and treasury offset. When you think about garnishment, this is money that is essentially being taken out of your paycheck or your income to pay for some, liabilities or things that you may own, right? So wage garnishment could be an account that's overdue. Account garnishments could be things related to loans, primarily student loans. Anytime you have any financial obligations, and as long as you're not meeting the terms and conditions of those financial obligations, the institutions that, or the financial institution that you're dealing with can essentially impose a garnishment to recover their money. Right. So it's really, really important to kind of understand that, any type of garnishments on any source of your income is essentially taking money out of your pocket. When we think about the treasury offset, right, this is anything related to any money that could be owed to the federal government. For anybody that may have, past due student loans, for example, essentially, when you go to file, your income tax returns, any money that could be possibly owed, to the state or, or the federal government could essentially be taken out of, those returns and also kind of looked at as a treasury offset. In addition to that, they could also be, situations where you may have to enter into a payment plan to essentially take care of the debt or the, financial obligation that you have. So it's really, really important to kind of understand the different types of garnishment. But the one thing that we definitely want to do is avoid any situations possible, where it actually gets to this point, because at that point, that's just reduces your total net income, and that can definitely have a financial impact on you. So, just want to kind of outline these, at least you're aware of them. And, essentially the goal is just to make sure that, we don't find ourselves in any of, these situations. So with that being said, what are the ways you can be paid money, right? So it primarily could come down to one of two things. You could be paid, cash, or you could be paid, via check, right? So those are just going to be the two most common types of payments that folks can receive. But then when you think about it, when we take it to the next level, it's kind of, hey, what are the ways to receive income? And when we put this in perspective, essentially it comes down to the following, right? Essentially cash, right? Paper checks, direct deposit, a payroll card, or electronic benefits transfer, right? So these are all the different forms and ways that you could actually get your income. Some companies, do actually have payroll cards for anybody that may not have a bank account or able to set up a direct deposit. Those payroll cards, are issued, and then of course the money is deposited onto those accounts. For some folks, depending on the services that you're providing, hey, cash could be an option, paper check. The most common form, of income from that most people have set up in place is direct deposit, right? Because that just means now you're just providing your employer with your, with the name of the institution, the financial institution that you have an account with, routing numbers and account numbers. And essentially that would either be set up on a weekly, bi-weekly, depending on what those payroll cycles look like. But ultimately, this just kind of gives you, some insight in the ways that, can be made available for you to receive income. And for some of you, this may already be something that you already, are familiar with and, have the ability and access to. So with that being said, we're going to talk about kind of the next step, which is just understanding pay statements, right? So when we think about a pay statement, right, here's the most common information that should be available every time you're looking at a payroll statement, right? So you're essentially, if you're being paid by check or by direct deposit, your employer should be able to make available to you, a payroll statement that lists all the different, deductions and everything else related to it. And when you think about a payroll statement, the first thing you were looking at is your personal information. Do they have the correct first name and last name as well as address? How are your pay periods running? Are your pay periods running weekly or bi-weekly, right? What pay date can you expect to receive, your income on? And in addition to that, every payroll statement, every pay statement will basically have your gross pay, right? List out all your deductions. And then, of course, that will also include what your net pay is, which your net income, your home pay, your takeaway home pay, and of course, in addition to that, what the employer contributions look like, right? So as you're looking at your pay statement and you're kind of just trying to understand, the information, really, really critical when it comes to earnings, when it comes to your hourly rate, the total number of hours you've worked, what your deductions look like for this period, what your deductions look like, year to date, all really critical information. This is things that we should definitely be looking at and always kind of, paying attention to. So at least that way, if there's anything, if there's any discrepancies, based on any information that's on there, you can always kind of, take note of it. And of course, highlight that with, with your potential employer to get that resolved. So that just kind of gives you some insight on, the examples provided for an earnings pay statement. Deductions, right? So these are the required deductions that everyone can expect to see on a normal paycheck, right? So required deductions is, FICA, Social Security, and Medicare. Income tax will basically be broken down to federal, state, and local, right? And then in addition to that, when we kind of look at anything outside of required deductions, we'll typically have what we call elective or voluntary deductions, such as insurance premiums. For those folks that may be part of a union, there's union dues in place. If you've got a retirement account set up, those contributions are also going to be showing up. Any charitable contributions, as well as direct deposits that could be made, will fall under the elective or or voluntary deduction. So when you're looking at a pay statement, when you're looking at it, essentially, hey, Social Security, Medicare, income tax, federal, state, and local taxes, standard. Anything else that you may have set up would then basically fall outside of the required deductions that everyone is required to have in place. So that just kind of gives you some insight on what to look for when it comes for deductions. So with that being said, we're going to talk about income tax withholding, right? So when we think about income tax withholding, Internal Revenue Service Form W-4, possibly state and local income tax forms too. Essentially what this comes down to is additional withholding. If you're setting up, when you're actually going up and when you're filling out your W-4 form, right? And you're basically putting yourself in the number of dependents, any additional withholding, right, essentially equals lower take-home pay, right? Any reduced withholdings will then essentially equate to a higher take-home pay. But with that being said, it's you have to be very careful not to have too little withheld, right? So if we're not filling that form out and putting the right total number of dependents and in essence for when it comes to our income tax forms, essentially we could have, a higher take-home pay, but at the end of the day, when you actually go to file, your tax, your income tax for the upcoming year, for the current year, then what ends up happening is they may be a difference that you would have to pay, because based on the withholding that you had throughout the entire calendar year could have been actually deemed as not, as slightly higher. So therefore, what you could find yourself doing is having to pay, either pay federal, state, or local income taxes back. So, as you're filling out your W-4 form, it's really, really important to make sure that you understand kind of what the additional and additional and reduced withholdings could have in terms of an impact for you. And then, of course, just make, the best decision possible for yourself. Right. So essentially, for those folks that, when you think about it, ultimately, when we talk about W-2s and just kind of giving you, more insight into this, for somebody that that has more than one job or a paid hobby, right? If you receive, an IRS W-2 form, that's for your employee. For an IRS 1099 form, employers would either consider, what they call a self-employed form. I mean, for the 1099 would essentially be considered self-employed, right? So these are kind of the two areas that we're going to look at. But most importantly, it's very, very important to understand how you're being paid, right? You may have to pay taxes yourself. You could consider putting money aside for the future, but the most important thing you want to do is keep accurate records. So when you think about the information that you're filling out, whether it's W-4, whether it's a W-2 or 1099, just make sure you understand all the information that's required. And essentially, if you're having to pay taxes yourself, at the end of the day, just make sure that you're keeping the most accurate records. And essentially, if you have an opportunity to put money aside for the future, then by all means you can go ahead and take advantage of that. So with that being said, before I actually go into the next slide, because I know there's a lot of information that I've covered, does anybody have any questions on what I've covered so far through this part of the session? Any questions on what I may have covered? Please feel free to come off mute. Let me know.
Jermaine, I don't see any questions in the chat. I think they're all soaking it in, and I don't see any hands raised.
All right. So thank you very much. So we'll move on to the next section we're going to be covering, is just tracking your income, right? So when we think about income, you put these into the various categories. First and foremost, regular income, right? Then we could also look at kind of what is considered unpredictable income, right? You may have, got some, money that came in that, wasn't planned for. Seasonal income for those folks that may have say you've got a full-time job, and then during, various seasons, you kind of take on a part-time job. That could be considered as kind of, seasonal income. And then of course, in addition to that, one-time income could just be that one-time payment for, for goods, for a service that you either provided, for a job that you actually, worked. But essentially, when you kind of put it in perspective, it's really, really, important to kind of understand that, hey, essentially regular income, seasonal, regular, and one-time income, in all things kind of considered, being able to track that is really, really important, because then that just puts you on a path to be able to understand, hey, here's kind of what I'm able to earn on a bi-weekly basis. Here's what I'm able to earn, for service, for a job that I'm actually working maybe just during the summer, or for, a seasonal, occupation. And in addition to that, if there's additional income that's coming in, maybe, you're fortunate, to have that happen, then what does that look like? But essentially, as the most important thing you want to do is just be able to track all of the income that's coming in, but just kind of, focus on, hey, here's what my regular income is. And then everything else that you could be looking at, as potential income would fall into one of these, other categories that are listed. So it's really, really important to be able to track all the relevant sources of your income, because then that can just help you plan, for a better financial future. All right, so as we come to the end of section 1, remember, key takeaway, understanding your income, this is the first step to, to using it to meet your needs, right? So really, really important, lots of information covered in the first section. And now we're actually going to move on to section 2, which if you're looking at page 15, your participant guide, will focus on expenses. All right, so with that being said, section 2, key takeaway. Understand your expenses. Okay, this will help you decide how to save, share, and spend your money, right? So this is really, really important. If you know what your financial obligations are, so when we think about a gross income minus your deductions, net income, here's my financial obligations, responsibilities, that will essentially let you know how much money you have saved, how much money you can share, and how much money, you'll be able to spend. So let's just think about ways, you can, to use your money, and what do people do with their money these days, right? There's so many different things, that could essentially require us to, to have to provide, to pay for, essentially, shopping, whether, it's a single family, whether it's, an individual or family, and you've got kids, that is essentially what you could be using, your money to take care of, right? Shopping, making sure you, whether it's school clothing or anything else for your kids, shoes, backpacks and everything else related. Hey, that's what we, most people today would be using their money for. In addition to that, rent, right? Rent is definitely going to be, an important one, right? Because essentially that's kind of the roof over your head. So that's what, you could essentially be, putting money aside each month to make sure when your rent's due, you're able to fulfill that obligation. One thing that's definitely been on the increase, in recent months, cost of living, groceries, right? And I'm sure we can all agree, the cost of groceries has increased over time, due to various factors. So that's something that, hey, if you think about it, essentially, if you, in your household, hey, besides anything that you may need to purchase for your kids, besides having to pay for your rent and utilities, the next most important thing is going to be food, right? And and all those other and anything else related to groceries. And last but not least, when we think about it, repairs, emergencies, right? We all know life happens, and sometimes emergencies come out of nowhere, right? So you may have to repair a leaky roof or a broken pipe, like what we can actually see on the screen. But essentially, that could be something where you would have to use your money for. So it's really, really kind of important just to kind of sit back and say to yourself, hey, on a monthly basis, where is my money going and what am I using it for, right? So primarily, these are going to be some of the most common things that most people encounter. And of course, as we go through the section, we'll, talk about other, aspects of expenses. But when we think about it overall, let's think about how you use your money. So essentially, we'll break this down into, first and foremost, do you have the ability to save money, right? In addition to that, sharing it, right? So that means either, taking care of other financial obligations, things that you have to pay for, and in addition to that, spending it, right? So when you think about the ways you could use your money, it's either saving it, sharing it, or spending it, right? But essentially, it just comes down to one of these three. And for from almost everyone, anybody that, has the ability to save money per paycheck, based on the various sources of income, you're putting yourself on the, on the right path. In addition to that, sharing it, having to take care of financial obligations, and then last but not least, what are you spending your money on, right? And that's going to be really, really important. So these three areas are, things that you can just kind of, think about and kind of, look at, as well as, when you think about how you're going to plan, to make sure that you can, eventually, hopefully attain what we call essentially financial independence. These areas are going to be really, really critical. And it's really, really important to kind of, understand where your money is going and how you are using it, on a week to week, monthly basis. And there's ways we need to basically think about expenses, right? So we'll put this into the following categories. So we'll have what we call needs, right? These are things you must have to live, right? So essentially, food, right? is definitely going to fall into one of those categories. Depending on whether you own your home or you're renting, that, having a roof over your head, utilities and all the other expenses that come up, those are things that are really, really important, just in making sure that you can have peace of mind and be able to go about doing what you have to do each and every day, right? So the needs are things you must have to be able to live and function. It could also be, if you own your own vehicle or multiple vehicles, what does that look like, in terms of your transportation costs on a day-to-day basis, wear and tear, and everything else related to it. Those are all the different expenses and things that we definitely need to kind of, consider. And those are the things that are really important and, must have, on your end to be able to kind of just live a normal life. And then, of course, in addition to that, we'll talk about wants, right? So those are things you desire and can live without, right? I mean, I can just relate to this, right? And I'll just kind of give you guys an example. For me, my family and my kids, my kids tend to like to want a lot of things, right? And, essentially it's just kind of like, okay, everything that you see, essentially while you might want it, they might have a desire to it, is it something that is a necessity? And this is kind of the conversations I have with them. Was this something that we can do without for now? And essentially, maybe look at, at a possible later date. But, wants are just things that a lot of people desire, but essentially, can, tend to live without. And then we think about obligations, right? These are, these are debts that you owe. So whether you have, credit cards or, any other financial obligations that you either required, to make monthly payments on, those are things that, you have to consider in terms of when you look at the overall aspect for expenses, right? So essentially, when you're looking at, the information on the screen, needs and obligations are probably going to, take precedence, right? Just in terms of what would be considered, things that you would have to look at for expenses. And then wants are things that we could essentially live without, desire, but can essentially live without, and something you can look at maybe sometime, in the foreseeable future. But most important thing that we want to look at when we think about expenses and we look at the three areas that have already been covered, right? Can you find less expensive ways to meet your needs, right? So there's a couple of questions that we want to just kind of pose here. And these are things you can just think about, and you can actually also just write them down. Can you find less expensive ways to meet your needs? Okay, can you use less money for your wants, right? And last but not least, can you negotiate lower payments for any financial obligations or debts that you may owe, right? Those are going to be three, really, really critical questions that everyone needs to kind of ask themselves and also kind of look at, right? Because essentially, I'm sure you guys have heard this before, if you find yourself living beyond your means, right? That means essentially you're either going to have to borrow money or you're not going to have any extra money left over to save or, to take care of any other things. So, living kind of within your means and understanding kind of, hey, here's what my net income looks like. Here's what any other, streams of income I may have. Here are all the list of my expenses that I have to meet on a monthly basis. And essentially, what does this look like in terms of, being able to meet those, meet your financial obligations. But if you find that you've overextended yourself, right? Maybe you've got something or you're paying for something that's really taking a lot of your net income away from, other things that you can take care of, for most people, until you actually find a way to be able to kind of, either maybe negotiate for lower payments, related to those debt obligations, or kind of just finding less expensive ways to meet your day-to-day needs, then, at that point, it could just, find yourself not being able to, achieve financial success. So, as you consider, things, as you consider what expenses you would look at for to paying, just kind of keep these three questions in the back of your mind as you kind of work out what you're going to allocate, the money that you have and what you'd be looking to essentially pay for. Right, for those, for folks that may find, themselves, receiving public benefits, a couple of things that we just want to make sure and highlight that each and every one of you understand. First and foremost, learn about the resource and the asset limits, right? With that being said, it's really important to monitor how you're spending and saving affects those accountable assets. And then, of course, just use the income in ways that avoid exceeding the asset limits, right? Really, really critical. So, think about the resources. How much are you spending? How's your spending and your saving affecting that? In addition to that, using the income that avoids you having, exceeding those asset limits. So that's just something that, to definitely consider as well, for those folks that may find themselves receiving public benefits. Just to kind of, elaborate further on with regards to expenses, we'll talk about tracking expenses, really, really important. Why should we be tracking expenses? First and foremost, hey, it helps you understand if you're using your money in line with the values and goals that you have, right? Uncovers where you can make changes, right? So if you're tracking your expenses on a weekly, bi-weekly, or monthly basis, really, really important. Hey, what am I spending my money on? If you remember what we had mentioned earlier, in terms of, hey, these are, kind of putting it into the 3 categories. These are things I can't live without. These are desires and things that I can live without. And then, of course, what are my financial obligations look like? All really, really important in terms of tracking your expenses. And last but not least, it helps you spend less. So if you're gonna, go about setting up a plan to track your expenses, it'll let you know where your money is going, how much money you're actually spending in those, related to those various expenses, what changes you can make to save some additional money, right, each month. And then, of course, in addition to that, help you just essentially spend less money. Because if we're, as I mentioned, earlier, if we're spending more than we're taking in, we're definitely going to find ourselves, just dealing with some, financial hardship. And that's not what we would want. So just kind of knowing how much income you've got coming in, what do your expenses look like, writing them down, keeping track of them, and just looking at ways that you can help spend less, overall would definitely put you on the path to, attaining financial success. With that being said, we'll talk about managing expenses, right? So anytime we find ourselves dealing with a situation where you might be dealing with a past due expense or past due account, right? Any account or any financial obligation that you find yourself and it's past due, right? If we're managing our expenses, then essentially what that could do is limit the possibility of us falling into the situation where we're dealing with past due accounts, right? And as a result of managing your expenses, it'll help you avoid paying late fees on maybe a credit card or any other accounts that you have, right? For most, right now, when you think about it, interest rates, on any credit card that whether it's an existing card or anybody that's applying for the credit card, in recent months, we've definitely seen there's been a lot of, interest rate hikes. So when you think about the interest that you're paying on an unpaid balance, right? If you've got a credit card, right, and essentially say, you've got a $1,500 limit, but you probably, close to being, maybe maxed out on that card. Even though you may actually be paying the minimum amount every month, there is interest being accrued on that balance that is owed. And, essentially that could also, result in additional financial, obligations on your part because it has to be paid. So as we're managing our expenses, avoiding paying late fees, interest on high paid balances, negative credit card report entries on all the different credit reports, loss of services, right? If we're not managing our expenses and we find ourselves falling, past due, maybe on a utility bill, on a cable bill, essentially, if that bill comes due and is not paid, the provider can then essentially, discontinue service. And that could, result in additional money that you would have to, put out to have those services restored. So just managing your expenses can definitely help with loss of services. And then, of course, the additional, as mentioned, the additional charges associated with the loss of services. Sometimes it could be reconnection fees, late fees that are assessed in addition to that. So when you think about managing your expenses, writing things down, keeping track of it, it's really, really important because it'll, avoid you falling into a past due status on the accounts that you have there. In addition to that, these are the things that, you could avoid happening to you, whether it's late fees or interest or, any negative reports on, with regards to the credit reporting agencies. So really, really important to manage your expenses and avoid, where possible, falling into a past due status. Right. Next thing we're going to talk about is just the ways to pay bills, right? And when we think about it right now, for most people still prefer, to pay for various bills in person, whether it's, with utility companies, going to the actual offices and paying for it. That's still available. A lot of people still traditionally use mail, right? So, depending on, now you can actually sign up, to go with paperless bills, right? So all they'll be able to do is, log into a mobile device, and then you'll be able to view your bill, and you can actually also make your payments, for whatever you may owe, which brings us to the next point, which is the most common that's used right now, which is electronically, right? So, through, various financial institutions, credit card websites, you can actually pay for these. And then, of course, most companies now will offer you a bill paying service, through it. If you look about it, almost every financial institution has an app that's available, and almost every service provider out there has an app. So it's just about you logging in, setting up your payment information through your account, and then, of course, making those payments electronically, to basically settle those, monthly bills is another way, to pay those on time. And then, of course, as mentioned, via mobile apps. So, these are the ways that, that are available to us. I wouldn't be able to, I can't see you guys on there, but, maybe if we had to kind of, think about, maybe just asking a quick question, what ways are you currently paying, your bills? And there's really no, each and every one of these is perfectly fine, right? There's no one that's better than the other. For most people, it's more or less the convenience. For others, it's, hey, by mail, writing a check and sending it out, is also perfectly acceptable. But just think about the ways that you're paying your bills, and most importantly, just to make sure that we're paying them on time. And in addition to that, as you get, your statements that are sent to you, just make sure that it reflects that your payments are being made. One thing that, now with electronic payments, a lot of times it's just a matter of logging in, putting the amount in and hitting submit. But, just as a good best practice, just make sure that you've got some way, shape, or form of being able to, get confirmation that payment's being received, right? Because that, that's really, really important. So if it's, whether it's an email, notification to yourself, or, a reference number, whatever the case might be, for anyone that is doing any type of electronic payments, it's really, really important to make sure that you've got a sufficient paper trail on your end to be able to make sure that, hey, you know what, there's no confusion or any issues that come up. And even if there is any discrepancies that come up, if you've got a paper trail in place and you've got email notifications and communication that's coming through to you every time you make a payment electronically, then that's a paper trail for you on your end, and you can actually reference that, and bring it, to light if need be. But that's just something that I want to, point out, especially with all the different bill paying services that are out there. Make sure you've got proof of payment, that the payment has been received. And in addition to that, when you actually do get your next statement, that the correct amount was credited, based on the payment that you made. So just a key takeaway, remember, hey, understand your expenses, right? This will help you decide how to save, share and spend your income. With that being said, we've actually come to the end of this session. So, when you think about it, just something that I just want you guys to think, look at, you can reference page 24 in your participant guide. Based on the information that that I've covered today, as you think about taking action, as you think about, putting in, best practices and just making sure that, you can utilize the information that we shared, just a quick couple of questions for you. What will you do? What will you decide to do differently, how will you do it? And essentially, will you share your plans with anyone? If so, who? So that's information that you can look at on page 24 of the participant guide. It's just kind of, some action plans and some action steps that you can take. And most importantly, you can also take advantage of the information that's provided, on the website that's listed, the fdic.gov/education, to learn more. But with that being said, I will, stop at this point and open it up to any questions you may have. In addition to that, I will stop sharing my screen and be able to answer any questions.
Well, thank you so much. We appreciate all of this information. It was really, really helpful. And let's just open it up. Do we have anyone who has any questions? Feel free to unmute yourself.
Good evening. My name is Michelle, and I had a question in regards to the tax deductions. And that is, I work for a company and they match your contributions for your 401k.
Right.
My question would be, should I exceed the amount that they match, or should I contribute at the same amount that they would contribute, if that makes sense?
This will vary, right? And I think the most important thing to do is, for most companies, they do match your contributions. I think whatever contributions that you're making for, whether it's a retirement account or anything else, does that fall within the overall budget that you have set aside, right? Because sometimes increasing, when we think about it, sometimes you could increase the overall contributions, but essentially that could, essentially have, an impact. No, it's not a negative impact, but just means you have less, income, to kind of put out there. So I think just do it to where it's, it makes financial sense for you, because I'm not, we're not in any financial advisory capabilities, but I can just tell you, like, from my own personal experience, I have a 401k set up through Citi, and Citi matches the contributions, and every year we have an opportunity to increase our individual contributions. So depending on what your retirement goals look like and how much you're looking to have, set up, when that time comes, that would then basically, let you know kind of what your monthly contributions should look like. And then what does that look like over the course of the next 10, 15, 20 years, so to speak. So, just do it to where it makes financial sense for you.
Okay, thank you so much.
Okay.
And thank you for the presentation. Very nice. Thank you.
Thank you.
So we have a question in the chat, and it says, how should I save a settlement from a past employer?
How should they save a settlement?
From a past employer, yeah.
Oh, so that means they received a settlement and now they're looking to put that money aside? Am I understanding the question correctly? I just want to make sure.
Yes, that's exactly it.
I think, just based on the presentation that we covered today, there's different ways, you can put your, you can, save your money. Essentially, I think whatever you're looking at doing in terms of whether it's just setting it up in a savings account or, I always say when it comes to things like investments, when it comes to things like assets, there's a risk factor. And it's best to, weigh all the risks and to speak to somebody who's, is financially trained to be able to give you that insight and information. A traditional savings account will still, give you the opportunity to earn interest on your money, right? But I think, ultimately for any savings that you have, it's just about making sure that you're not putting yourself, at risk of losing it, based on a decision or, or certain circumstances. So I can just tell you from my own personal experience, I have a traditional savings account that's set up. right? And, essentially while the interest rates on, that's provided through the bank might seem lower, just for me personally, the peace of mind with anything that you're doing, with anything that you're doing, when you think about investing, if there's an opportunity for you to grow that money, great. But what is the risk associated with that, right? And it's just supposed to make sure that financial security is something that we have to put at the forefront, right? If it's a settlement that's coming into a large amount of money, hey, let's just start with the savings account and then maybe, look at what other options are available to you. But most importantly, if you're going to go down that path, just make sure you're getting the right financial advice from somebody who's trained and knowledgeable, within the areas that you're looking to invest your money.
Thank you. And our participant also gives you her thanks. So do we have any other questions? You can feel free to drop it in the chat.
So yeah, thank you, Jermaine. This is Rashi also from Citi. Just want to ask the participants, like, is there something that you heard from this presentation that you were unaware of, or you had knowledge of many of the things that Jermaine presented? And if there, these are all great questions. Thank you, by the way, we appreciate that. We also want to learn from our presentations, like, is there something that that was never covered or you were not aware of, anything that you heard, whether it comes to deductions or when it comes to expenses and saving and also investing. So what did you hear today that struck you the most?
So I'm just looking through the chat, and some of the feedback is that this has been really great. Thank you. There are some people who have asked about avenues for savings, understanding financial growth opportunities, building capital through home ownership. And yeah, so it looks like everyone is absorbing the information. It's a lot of really great information, and I'm hoping that everyone can utilize this. And if you have another comment, thanks for the great presentation. So
yeah, I just wanted to share on that note, regarding the different types of savings vehicles. I think it's going to be next week's session, actually pay yourself first. We will cover like various types of savings accounts and etc. So if you stay with the series of 6 classes, I think, you will also learn more than what you did today. So each journey will be different, and we hope you all can participate. Thank you, Kimberly.
Sure. And on that note, our next session is going to be Pay Yourself. And I want to encourage all of you to log in, because we do have a special drawing that we are going to be doing for next week. We will have a very surprise giveaway. So if you are excited about this, if you're learning something, we really appreciate it. And we want you to make sure that you share this with anyone that you think that may be able to benefit from this information. You can share the link that you received. Everyone will have to register, but we are excited to continue to bring you part 2 of this 6-week session. And then also, just really quick, we had some feedback from some of the registrants and our participants, and they wanted to know if starting at 6 o'clock would be better. So if each of you could just let us know really quick in the chat, if we did a 6 o'clock start, is that better for you? Is that really great? Or what might we lose you if we do a 6 o'clock start? Because we're thinking 6 o'clock would be much easier. People are getting off work, getting through traffic. So Looks like 6 o'clock is working for folks. So, okay, great. All righty. Well, if we don't have any more questions, then we are going to bid you all a good evening. Thank you for participating. Thank you for stopping by, sharing your evening with us. And you have a good night.
Thank you.
Thank you. We'll
See
see you next week.
you next week at
See you
6
next
p.m.
week.
Thank you. Have a good evening.
Bye.